Welcome back to the Retirement Fiduciary Podcast, your classroom for no BS financial education. A place where we have authentic discussions about retirement planning, investment management, tax reduction strategies, insurance estate planning, and more. Here's your host, Adam Koch, President, Portfolio Manager, and Senior Financial Advisor at Libertas Wealth Management Group.
What's going on, everybody? Thank you so much for joining us today. As always, just want to start with a couple housekeeping items. If this is your first time listening or watching, then thank you so much for joining us. The Retirement Fiduciary Podcast is an authentic educational show aimed at providing honest, candid, fiduciary-driven insights for individuals and couples all over the country. The podcast is produced bi-weekly as we cut through all the noise in the markets, dropping no-nonsense, unbiased knowledge to help you make work optional someday, all while living the lifestyle you always wanted. So be sure to subscribe on YouTube, Apple Podcasts, Spotify, and if you can also find more of what we share on TikTok, Instagram, Twitter, or they call it X now these days, as well as YouTube. To find out more about what we do with our clients and how we work with our clients, simply head over to libertaswealth.com. And today on the podcast, we've got another guest, a repeat guest, I should say, and Rachel Alley. She's a Realtor and Team Leader for Millennium Group, Keller Williams Capital Partners in Central Ohio. She was drawn to the real estate field as she saw a way to combine her strong negotiation and communication skills with her passion for serving others. She has a love for historic homes and all things vintage. She's grown a successful, extremely successful real estate career since receiving her license almost a decade ago at this point. And she also created her own team just 1 year after she started and has sustained a year-over-year growth ever since starting the business, which is pretty impressive. She's received numerous awards and recognitions throughout her career, and has also been a mentor to several new agents in the industry. She's a leader not only within her team but within her market center and the real estate group community-wide, as she's often asked to speak at various real estate events, conferences, and so on. In her spare time, personally, Rachel enjoys spending time with her family, reading, renovating homes, volunteering in the community, and joining community events throughout Central Ohio with her family of 4. So enjoy my conversation today with Rachel Alley. What's going on, everybody? Today, I'm excited to welcome a repeat guest in Rachel Alley, a seasoned real estate professional with a passion for historic homes and vintage treasures you may or may not know. Since starting her career almost a decade ago at this juncture, she's built a truly thriving business, impressive in terms of an extremely successful team, and earned numerous awards on top of all that. Outside of work, she enjoys family time with the 2 kids and the never-ending task of renovating her home, which I know that is truly never-ending, as well as volunteering her time in Central Ohio. Obviously, you just listened to the longer intro and the bookend, but let's just go ahead and get started here. Rachel, thank you so much for being willing to jump on this podcast again. I'm surprised you were willing to do so.
Yeah, thanks for having me again. This is awesome.
So a lot's changed since we talked last officially online like this. Interest rates have gone up, 200+%.
Yeah.
There's lots of opinions out there, no shortage of opinions in terms of, should I sell my house right now? Should I buy a new house? We've got a couple people we're talking to right now at our office, clients, that they're kind of in this conundrum where they're even being offered a ridiculous money. This one client's being offered a really, really high, absurd amount for their house that it's not worth, honestly, but they want to pay cash. But then they want to move, and the new house with the new interest rates, it's just insane. So I think they had a little sticker shock after they looked at taxes, interest, principal, and then home insurance. So tell me, maybe just, I don't know, go off on a few tangents off the guardrails. Tell me a little bit about the real estate market today now, how it's different than it was 2 years ago. Let's just start there.
So the market 2 years ago, coming into 2021 and spring of 2022, those were really anomalies of the market. So sometimes we can trick ourselves into thinking that that's going to last forever when we're in it. And then the market adjusts, and we've experienced what we've experienced in 2023 and 2024 so far. So interest rates obviously more than doubled since that time. We still find a shortage of inventory here in Central Ohio. And despite a lot of the changes in the market, Central Ohio is still a very strong place compared to other sections of the nation. So we are still doing very well on paper. I think what we're starting to see amongst a little bit of a economic tension is the emotional stress that comes with buying and selling homes and making those financial decisions for families. And with the affordability challenge, with the new interest rate, like you mentioned, your client who's in a house now they're probably locked in at a 3.5, or 2.5, depending on when they bought it or refinanced. And so making that move, usually they're upgrading to a larger home or a little bit more expensive price point home and trading that interest rate for a 7 or a 7.5. That is a really big sticker shock. We're going through the same thing as my family grows as well. So we see a little bit of this bottleneck of the market, which is the middle of the market, which are, families, growing families where they're not in their starter home, they're in a larger home, but they maybe need to upsize and they're choosing not to because of the financial dynamics right now. So that middle market in real estate, we really don't have much inventory because people are choosing to stay and not selling and transitioning like we have in the past.
Interesting.
Yeah. And then with first-time home buyers, now the average age of a first-time home buyer is 36 years old.
Ouch.
We had a 5-year jump. It used to be 31 years old. So just in a short amount of time, we had a 5-year jump of those first-time home buyers coming into the market. So, and we don't have enough affordable housing for entry-level homes.
I'm going to mess this up. This
Yeah, go
statistic
ahead.
yesterday, we were talking at the office in our staff meeting. It was Monday anyway. And I'm going to mess up the stat, and it's probably totally wrong, but maybe you can correct me, or
Okay.
if you don't know it. It's somebody said the other day that in order for a first-time home buyer to buy a home, you have to make at least $115,000 a year before it even makes any sense.
Yes, I think that's the affordability challenge. And what we're finding is, if you're renting an apartment in Bridge Park, naturally you'd want to probably buy a starter home in Dublin, right? But unfortunately, the starter home in Dublin is so much more expensive than the rent rate that it costs to rent to maintain that location and that lifestyle. So in order to shift that into what would typically be a mortgage payment, homebuyers are having to trade a lot of that location or that comfort level for some of those starter level homes, which puts them a little bit into the city or more outside of the city in rural areas for affordability. And they're just not willing to trade that lifestyle.
Do you feel like there's a difference between the amount of business being done in the lending world versus realtors?
No, I
It's the
think,
same,
yeah. And
roughly?
we actually had a lender in yesterday, a lender partner of ours, and we try to stay on top of what's happening, with their leading indicators, because it usually transitions into what's going to happen in the real estate market. Are their applications up or are they down? That tells us if there's going to be, a wave of buyers coming in, or it's going to be a little bit slower as we head into, the fall season. So the mortgage industry has seen a 50% reduction in the number of loan officers. That's
Oh, wow.
huge. I mean, that's a
Interesting.
huge impact to that industry. The refi business is up for the first time in the last 2 years, slightly. However, we lost a lot of LOs during that, refi phase when that kind of phased out. And the number of transactions being done has decreased nationwide.
What's your opinion on refinancing in 2024 and beyond? I remember when I started my career, 23 years ago,
Yeah.
interest rates were kind of like they are right now, honestly. I mean, it's like, I remember I bought my first house and I think I paid like 7.5% interest, and that was completely fine. Like it was no
Right.
big deal,
Right.
And to refinance, I remember the rule of thumb back then that we used to share with people is that if you can't get it down to around 4, that it probably doesn't make sense. But that's probably not a good rule of thumb because it's on absolute. So in your opinion,
Right.
if somebody's got like a 7%, well, not even a 7% rate, whatever rate they have, when should they be looking to refinance their house?
So really, we're looking for a 0.5% or a full percent lower.
What's the break even?
Ultimately, what's happening now is the lenders are actually offering free refinances as part of their loan.
Oh, wow.
So there's a lot of lenders in the market that have recognized that, buyers are entering at this interest rate with the intention of when rates drop, they're going to want to refinance. So they've put themselves in a competitive place against some of their competition in order to say, hey, we're going to offer you a one free refinance so that when rates do drop, whether it's a quarter or 0.5% or a full percent in the future, we're going to honor that refi because they want
That's
to
really
retain
smart
business.
because
Yeah,
otherwise they lose the business. And all the while, every bank in the world is doing a ton of work and paying
right.
people to do the work
For
that would
that
be
loan to
completely
leave.
unnecessary. Yeah.
Right. Right. So it's a
Um,
retention move for the loans. But
yeah.
I think as we move, I mean, the Fed, they talked about cutting rates in September. So we are optimistic that we will see a little bit of a shift in the rate downward as we move into Q4 of this year. They talked about 2 cuts in September and maybe another one in December. So I'm curious to see how that actually will impact mortgage interest rates by the time it makes its way through to that industry. I'm not a mortgage professional by any means, but we sell a lot of houses. So these are things our clients are always paying attention to. And one of the biggest challenges is that interest rate objection right now.
Yeah, for sure. Yeah, it's my opinion. I was looking today because the Fed meeting's today at 2. And I was looking up the probabilities because betting odds, it's pretty interesting how accurate they can be. And right now there's only a 7% chance of a cut today.
Right.
That's probably not going to happen. The first cut, there's something like a 90, I think it was 90 something percent chance of a cut in September. So
Right.
it's coming. But I think
We
it's
just
going
don't
to
know
take a
what that's going
while.
to translate to relief of affordability in the market right
I
now.
was just going to say, yeah, I think that's probably going to take some time for it to bleed into the mortgage market.
Right.
Looking at 10-year treasuries, the 10-year treasury yield, for instance, like it's going to come down, but I don't think people are probably going to be rushing to refinance until probably first quarter of next year. That's my guess.
Well, I think sometimes we think real estate is just going to be a statistics market. And while there's a lot of data around real estate, when we're in the residential sector like I am, I mean, people move because they have need. Everybody always needs somewhere to live. People buy and sell. They have job relocations. They have family changes. I mean, they have health changes. So we went from a market that people were moving because it was easy. Money was accessible. It was easy to move. There were lots of options in the market. And now we're back to what, when I came into the market, was always a needs-based market.
Yep.
So that's really the only change. We're back in a needs-based market. People are moving and making decisions based on what they need in their life, rather than just like, hey, I saw a house, I can afford it, I'm going to go buy it this weekend. It's a little bit of a different change of pace.
I
So
think
to me, it's
people,
kind of back to normal. But
right. I feel like it's like recency bias. I think that humans, we always forget pretty quickly how things used to be, and then it's just a matter of perspective. However, let's get back on the first time home buyer train, because what advice are you giving to them?
So, I'm kind of financially savvy, so I like that side of it. And I am telling first-time homebuyers, and first-time homebuyers are really savvy right now. They're well educated. They have lots of access to resources. There's some great programs they're taking advantage of, and they're really savvy. And we're talking about the opportunity to get them into home ownership so that they have an asset to trade for an asset they want. Does that make sense?
Yep, it does.
So if I can get you into home ownership, you now have an asset that is appreciating, you're paying it down, what have you. Now we can add that to your financial portfolio. You can decide to keep it and house hack, as they would say, as a financial tool, or that allows you to build equity so that when it's time to make a move more for what you're looking for, more of a long-term move, you have an asset to trade equity into.
Yeah,
And so
that makes sense.
I'm taking more of like the logical approach to first-time home buyers and working with my team on that to say, okay, how do we just get them into home ownership? Because that provides them financial options for what they want their long-term goals to be.
Back in 2021, I'll say, a little bit in 2020, but mostly in 2021, we started to see more people come to us at our firm saying, "Hey, before I talk to a realtor, or while I'm talking to my realtor or my lender, can we run the numbers to find out how much house I can afford, because things have changed so much."
Right.
And back then, things hadn't really changed all that much, right? So now here we are, 2024, things have changed a lot. Are you seeing more and more people do that diligence on their own to really make sure that before they go, jumping on the home ownership wagon, and getting access to that appreciating asset, that they can afford it and they're not going to turn themselves upside down and, actually have
And
fun?
we're not all created equal, but we really try to educate on financial literacy in the real estate space. So when you get pre-approved, you're pre-approved based off of your gross income. It doesn't account for things that you might be paying for in your lifestyle. It'll take debts into consideration, but anything outside of that is not going to account for. So we're talking to them about not only what you can be a pre-approved for, but what can you actually afford each month? And what are you willing to commit to without being a job loss away from losing a house? And I think that's where a lot of people are right now. They're a job loss away from losing a house.
Sure. Scary.
Yeah, we're starting to see some foreclosures and some things come back into the market that we haven't seen in a long time. So that economic pressure is mounting. So really educating them about, what are you affording now, and how does that feel? What can we get a pre-approved for? What does that translate to into a payment? And taxes around Central Ohio vary based on where you're located. So really accounting for the full picture of, your insurance, your taxes, and your mortgage, and making sure that we're educating them on what they can financially afford, or how can they financially afford them. If they're a single person, does it make sense to have a roommate?
Sure.
Or if it's,
That's a good idea.
two individuals coming together and, now they're going to be a combined income, how is that going to look compared to maybe what they were affording individually? So looking at that greater financial picture.
Yeah. So would it be safe to say that people are now more than probably ever in the last, not ever, but more than the past decade, probably needing to be a little bit more careful in terms of prepping themselves financially to make the right decision?
Yeah, I think it's really important, and we should always prep ourselves when we're making like big purchases like this financially, and taking the time to understand what the numbers look like, what we're comfortable with, what we can commit to long term, and any variables that may come into that.
Are there any misconceptions that you're seeing a lot now that maybe are any different or even similar than what we saw, say, 2, 3, 4 years ago?
No, I mean, we always see this tagline that agents throw out there that's like date the rate, marry the house, and I couldn't agree less for that, because it's banking on the promise of a refinance. So we don't know when those rates are going to change. We don't know if it's going to be 3 months from now, 6 months from now, a year from now. Like, we have to be able to afford that payment for the house today and long term, should it continue to stay that way. Now, the good news is there's a lot of creative products in the market for buying down rates, or the 2-1 buy down's been pretty popular in the last year or so. Sellers, with the market change, inventory is actually up 33% year over year.
Interesting.
Yeah,
Okay.
it doesn't feel that way because,
No.
like I said, that middle of the market, that's a little bit more stuck. People are staying longer, but inventory is actually up 33% year over year.
Can you explain to the people listening and are watching what a 2-1 buy down is? Just because that's one of those kind of phrases that people don't understand.
Yeah, so 2-1 buy down is essentially where we're buying down the rate. And the first year, it's going to be 2 points below market. So if it's 7% interest rate, for just ease of numbers, 7%, your first year is going to be at 5%. Your second year is going to be at 6%, and then it's going to resume that market rate of 7%. By that point, most of us are trying to refinance within that two-year period, should rates go down. But it gives a little bit of a payment relief in that first 1 to 2 years until hopefully we can refinance afterwards. So that's been pretty good.
So bottom line, don't buy a house under the premise that you can only afford it when rates go down, because we just don't know when that's going to happen, obviously, or how the Fed cutting rates is going to bleed into the rest of the market, like we were saying.
Right.
What about strategies for sellers? What are you telling them, for people who are looking to get out of their homes and move?
The biggest difference between the peak of the market that we experienced a couple years ago and today is home values are still appreciating year over year here in Central Ohio. We have not seen that dip. There are sectors of the market that are softening at a faster rate and are actually more depreciating than appreciating. Most of our suburbs are doing pretty well. However, buyers are willing to pay good prices for houses. They are not willing to fix all the things that are broken. So in 2021 and 2022, we were buying houses as is, no worries, we'll take it, please give us the keys. Today, they're willing to buy the house, but they're not willing to replace the furnace, replace the roof, replace the windows, fix the things that are broken. And so we're actually seeing a lot more properties come in and out of contract on the market.
Okay.
And it all comes back to affordability. They can afford to buy the house. They can't afford to come out of pocket $20,000, $30,000, $40,000 for the problems that it has.
That's interesting, because I actually heard a couple of situations like that, stories where they're like, hey, will you give us an allowance at least? And they're like, no, thank you. Which obviously compounds the problem.
Yeah, so we're really working with our sellers, and we're actually working with them more long-term. People are being a lot more intentional about their move. It's not, going out for a listing appointment, putting it on the house, putting it on the market this week. We're actually taking the time to plan and prepare. What do we need to do to best position this house product for the market? What are the repairs we need to make? How do we be strategic about this in order to get you to your goal? So it's taking a little bit more strategy and experience to help these sellers succeed in a little bit of a shift of a market.
Yeah, that's obviously good to know in advance, and good that you're actually implementing those strategies as opposed to just throwing it on the market and finding out, later when you've wasted time, or that you didn't have to waste time. What about, you talked about Columbus being, a pretty strong market, relatively speaking. Are there any neighborhoods in Columbus, in particular areas of Columbus, Central Ohio, or even emerging markets that are particularly hot right now for those that might be looking to sell? I'm not so sure you want to buy in a hot market, but you tell me.
Yeah, so with everything happening out east, I mean, we're seeing a lot of appreciation in Licking County naturally with Intel coming in and the future development of that. We're seeing higher appreciation rates out there. Reynoldsburg continues to be a little bit more of a hot market.
Hmm.
I
Why is
mean,
that?
and
Is it because it's close to
because
Intel?
the expansion of the city.
Okay.
Affordability is still favorable there. Home prices are still, pretty favorable. So it's a good movement of a market.
Hmm.
And then anywhere that there's really development happening, we're seeing outside investors coming into the market. So we're still seeing, capital investors from the coasts.
What about opportunities? What opportunities are you seeing out there for both, well, all three of sellers, buyers, and investors, despite current market conditions?
So opportunity wise, I'll touch on the investors in a second. As far as buyers and sellers go, really the opportunity is what's important to them. So real estate is an emotional decision. It's one of the top 5 most stressful things people do in their life is moving. And so when it comes to buyers and sellers especially, they tend to be moving because they have a life change. They already own a house, they're having a life change. Now the good opportunity for them is the market continues to be very strong compared to, 2012, 2015, 2018. So homes are selling for great values. They're sitting on a ton of equity if they've owned their home, even for 3-4 years, they're sitting on a ton of equity. So the opportunity for them is really using that asset as kind of like a leverage point financially. And we see a lot of downsizing sellers or retiring sellers moving out of Ohio to Kentucky, Tennessee,
Really?
those different areas because taxes are a little bit different and affordability is a little bit different. And they're chasing grandkids too. So I think sellers are the opportunity of the market right
Wow.
now. It continues to pace itself. It's a great time to be a home seller. Buyers, really having an agent help you navigate the current landscape is really important. Every house, it's not like 2021 where, okay, every house you go into is going to be competition and there's going to be 20 offers. Now it's house by house, case by case, and different strategies based on what the situation of that property is. So days on market, I always say, are equity killers. So the longer a house sits on the market, it's a good opportunity for buyers to leverage that to get in and get good terms and prices and things. And as the market lulls, if you've been sitting on the sidelines, we've had a lot of buyers that were like last year, they're like, I'm not competing with this. Interest rates are high and there's still competition. Now that we're in this place now, pull yourself off the sideline. Now it's a really great opportunity to come into the market and get good properties at fair prices.
I remember the
And then
days when
investors,
it was all strategic and you really had to go into each house with a different strategy. Sorry,
yeah.
I didn't
No,
mean
you're
to
fine.
interrupt you.
And investors, so it's interesting because with home prices increasing and then now the cost of money being more expensive, we have seen out of area investors kind of subside. They're not snatching up properties like they were maybe 2 years ago or 5 years ago even. What I'm working with a lot now are local people who maybe are a little bit more well off and they are trying to put together a financial strategy for the next generation. And as property values continue to increase in Central Ohio, they might have kids in middle school or high school or going to college. And they're like, I want my kid to be able to come back. And I want them to be able to like live here and buy me if they choose to. So
Hmm.
I'm having a lot of people purchase investment properties. We might have to put a little bit more cash down, 30-35% to make it cash flow, which is fair. But they're thinking about it as an asset for their kid to have. So they're kind of next generation planning.
That's interesting.
Should my kid come back, they can inherit this house or take over this property. Now it's their asset to trade. It gives
make
them a
it
place to live here, be in the market, but also gives them an opportunity to say, okay, I'm going to sell that condo in Columbus and I'm going to move that into something in the suburbs or whatever it may be.
kind of remove some of the barriers to entry, so to speak.
It's removing some of those barrier to entries. In 2021 and 2022, we saw a lot of parents get involved with providing down payment and gift funds and appraisal gap coverages. This is a little bit of a secondary strategy of how do we purchase the property for them, allow it to be an income producing asset in the meantime, pay down, have the tenant essentially pay down that mortgage and then gift it to the child later.
Yeah. Okay. Is there anything else in general before we close out today that I didn't ask about that you wanted to make sure you share, whether it was about the market as a whole or, anything I missed?
I think all the questions were really great. The biggest thing is always having someone that knows the market and is helping you advocate for your plan. Every person's plan and end goal is a little bit different and motivations are different. So as you jump into this market, just take a little time to understand what your options are and the strategy that you can take in order to achieve your goals.
Yeah, like you said earlier, it's not a market where you're just getting up one day and saying, "Hey, I'm going to go drive by and buy this house this weekend." Yeah,
Yeah.
yeah,
Yeah,
no,
it's
that
taking
makes
a little bit
sense.
more time, a little bit more planning, and having someone that's really going to consult with you about what your options are and what that's going to look like.
Nice, awesome. Well, thank you so much again for giving us an update on what's going on out there. I know there's a lot of questions, and I appreciate you providing all the answers. There's a lot of bad information. I think a lot of misleading information. So I think it's good to get the honest truth here. So
Yes.
we can get a hold of you at columbushousetohome.com, right? If
Yep.
people want to get a hold of you, they can also get a hold of Rachel on LinkedIn as well. So you can find her there if you want to contact her personally. But other than that, are there any other socials you want to share? Any other ways that anything else going
Yeah,
on?
if you have any questions about the market or what you're trying to achieve, anything that we can do to help, you can always email me. It's Rachel, Rachel, Alley, Alley, @kw.com. Or feel free to
Awesome.
call me at the office, which is 614-636-0062.
Perfect. Well, you know what to do. As I always say, it's if you know but you don't act, then you don't know. So now you know.
Now you know.
And there's thousands of podcasts out there, and you chose to give hours a listen or a watch today, whether it was YouTube, Apple Podcasts, Spotify. So thank you so much for tuning in, and we will see you next time.
Thank you for joining us on the Retirement Fiduciary Podcast. To see any charts or images that were mentioned on this show, to check out additional articles, videos, and other educational resources, or to set up an intro call with your host, Adam Koch, just head over to libertizwealth.com. This podcast is for informational and entertainment purposes only and should not be relied upon as a basis for investment decisions. None of our shows engage in rendering legal, financial, tax, or other professional services. Always talk to a certified financial planner or fee-only fiduciary financial advisor before implementing any of the ideas shared in this episode.